Good afternoon and welcome to HYCM's online trading workshop with myself, Giles Coughlin, the Chief Currency Analyst here at HYCM. Welcome aboard, everybody. Hi, Sammy, good to have you. And Van, that's lovely. Akak, Cecile, Isar, Preben, lovely to have you on board for this webinar. Just as people are coming on, I'm just going to make clear that as we go through different trade ideas, different trade setups, entries, exits, etc. One thing to be aware of, that this is not trading advice. So the whole idea of this webinar, and obviously those of you who have been following me for a while will understand, this is not about trading signals or offering people should they buy or sell an instrument. Instead, it's showing people how to go about making trading decisions. So the idea is you look over my shoulder, you see the way I'm making my own trading decisions, the thinking process, and then you can use those principles to take them away and use them in your own trading. So that's what goes on in this workshop. So the idea is that it's not me telling you what to do, it's me showing you what I do, and from that you guys can learn. So I hope that's helpful, just to make it clear. And of course, the important reason for that is, the reason this can't be a signal service is because you might say something on Tuesday and then by the afternoon it's no longer relevant, or by the next day what you said is no longer relevant. So it's far more useful to see for yourself the principles, so then you can know and recognize what's going on without missing out on anything. Right, I'm just going to put this workshop guide in. The next thing we're going to do, there's a workshop guide, and if you look into your GoTo webinar control panel, you'll see a workshop guide entitled February the 12th. It's just in the grey box. There's a little grey arrow next to handouts, and it says 1 of 5, and it should say workshop guide February the 12th. Just open that up, and when you open that up, you will have this sheet comes up. This sheet is a sheet that I've designed to straightforwardly outline what you need to be looking at each time you come to your desk. And I've used 5 titles of looking back, looking forward, looking at the charts, looking at your risk, and looking at the outcome of your trade. And the idea is that you can print this out, and by printing it out, you can leave it by your desk, and that will help you make trading decisions as you go through. So the special topic we're looking at today is what is moving the Canadian dollar at the moment. Okay, so we'll have a little look at that during the workshop as well. So I'll close that down for now, and we'll open up our keynote. There we go. So we cover the special topic, which is looking at the Canadian dollar for this situation. And don't forget, any suggestions for topics, you can just email me here, giles.coughlin@hycm.com. So without further ado, if you turn to your handout, and we're going to go through the handout, and I'm going to show you how I use this handout day to day. This is basically internalized the different procedures I have in place to approach the market. So the first thing you do before anything is you look back. Every time I come to my desk, I want to see what has been happening and what is going on. And I'm trying to identify recent sentiment. I'm trying to look at the recent mood of the market. And this is what you should do as well. Every time you come to your desk, you want to look back and ask yourself, what has just happened? Is it significant? How significant is it? And today's a really good example, because we'll be looking at some significant events that have been taking place. First thing I do, I want to look at the equity markets. Remember, equity investors, stocks and shares, and these indexes are the group of leading shares for certain countries. So the S&P 500 is the US leading share index. The NASDAQ and the Dow are also US leading indexes. And then we have European leading indexes, the FTSE 100, Euro, French CAC 40, the German DAX. And these indexes give you a good indication of how the market's feeling in regard to risk. When the global equity markets are in the green, when they're being bought, that is a sign that the market is in a risk-on mood, okay? And when the market's on a risk-on mood, we see certain characteristics. So the first thing, coming to my desk, and I'm seeing we are still in a risk-on mood. You can see the Nikkei, the Asian equity index from Japan, up 0.74%. The Hang Seng up 0.87%. The Shanghai Composite up 0.87%. So taken as a whole, excellent risk-on market mood. So we'd expect in risk-on markets, we'd expect the following. We expect yen and Swiss franc weakness, and generally gold weakness, and we'd expect Australian dollar, New Zealand dollar, Canadian dollar strength. So these are the commodity currencies. And generally speaking, it makes sense, doesn't it? Because if equity markets are being bought, it means that everyone's feeling more optimistic about the growth of the economies across the world, okay? They are helping to increase the commodity usage of copper, iron ore, these different commodities that come from Australia, New Zealand dollar, oil, which helps Canadian dollar. So a growing company leads to growing countries, which leads to these commodity currencies being in more demand. Okay, so that's just some of the philosophy behind it. So that's what we see this morning. We see we're in a risk-on mood, and that tells us straight away. Remember what we're trying to look at. We're trying to find out which are going to be the strong currencies, or which are going to be the weak currencies. Okay, we're trying to work that out. So this is the first part of the jigsaw that we have for the day. Now, looking back, there was a key event last night, and I'll just show you that key event. That key event was the RBNZ interest rate statement. Okay, so we're going to look at that in a little bit of detail now, because we've seen some good reactions from the rate statement. Now, what we've seen is going into the rate meeting, the RBNZ were expected to stay on hold. Okay, you can see here, look, the interest rate was expected. So 1% was the previous interest rate. The 1% was expected to be held, and it was. So why have we seen some New Zealand dollar strength? Well, here's why. Because going into this meeting, the concern was that the coronavirus outbreak was going to weigh heavily on the New Zealand dollar. There were two banks, BNZ and ANZ, out of New Zealand, who had downgraded their GDP growth forecasts for New Zealand. And the concern was that maybe the governor would say, yes, the coronavirus is going to have a heavy impact on us, so we're going to be changing our outlook. Instead, what Governor Orr said, he said they were working on a model of 6-week disruption for the coronavirus. Okay, and so they've taken half of the expected first quarter growth due to coronavirus outbreak. So the message to the market was that this is in hand, because they didn't say, you know, yes, this has fundamentally changed the outlook for the New Zealand dollar. We're really worried. We're revising our forecast, and we may look to cut interest rates next time. They said, look, we can always change policy if we need to. So they were saying, for now, we're looking at a 6-week disruption, and that's it. So that was, in one sense, that was not a bad kind of result for the market. There was a bit of relief in that. So that was what was helpful. Then, this is what really increased the New Zealand dollar, was they said, we are changing our forecast for the future rate path. Okay, so prior to this decision, they saw interest rates being at 0.9% through to March 21. Okay, and they changed it last night, saying we now see interest rates at 1% in June 2020 and 1.10% in June 2021. So in other words, the Bank of New Zealand have essentially said to the market, we're feeling much more optimistic than you had previously, than we had previously thought. So obviously, when a central bank raises interest rates, that increases that central bank's currency value. Because when a country has a higher interest rate, it attracts investors, it attracts money. Obviously, with interest rates being so low, if you knew, oh, hang on, if I put my money in this country, which has higher interest rates, I'm going to have more return on my cash because the interest rates are higher. It's better value for me. So whenever a country raises interest rates, it attracts inflows into the currency. So here's a question for you. I'll do it on the panel. What impact do you think it would have on the New Zealand dollar when the central bank for New Zealand said that they now see interest rates going higher in June 2021 than they used to see it going in 2021? So there's a 0.2% increase. Do you think, answering the question panel, if you haven't done this before, if you're just joining us today, there's a question panel on the GoToWebinar control panel, and you can just type in questions there. Just type in there whether you think the value of New Zealand dollar will go up or the value of New Zealand dollar will go down. What do you think? What reaction do you think the New Zealand dollar would have to this announcement? Yeah, Sammy, that's spot on. Cecile, excellent. Very good. We have 2 gold stars to give out, one to Sammy and one to Cecile. Excellent. Yes, the New Zealand dollar would go up. So if you didn't know that or just didn't reply to the question, make sure you understand that fundamental perspective. When a central bank raises interest rates, it goes up. Now, here's the learning point. The central bank didn't raise the interest rate. Look, we know that it was expected to be on hold, and it was on hold. So in this kind of situation, what happens is the market focuses on the policy statement and in particular, the forward guidance. What is going to happen in the future? And the RBNZ have said the future is looking brighter for the New Zealand dollar. And so we're looking at increasing interest rates for our economy. So that has resulted in New Zealand dollar strength. So straight away, when we're looking, what's been happening, this is a significant central bank event, and we see that there's strength in the New Zealand dollar. So now we have our sentiment. We have strong New Zealand dollar sentiment, right? So that's what we've had. We also had some data out this morning. Let's just go back to the Forex Factory. We had some industrial production data out for the euro. Now, the euro is being sold off quite heavily. There's a lot of hedge funds. Oh, hang on, I'm just going to look at a question. Yes, Sammy, it's already moved up and we missed the move. I will come back onto what we can do about that, Sammy. And if you had got to this first thing this morning, you could have potentially got some of this move. And I'll also explain what we can do now the New Zealand dollar has moved. So just bear with me, Sammy, and I'll address that. We'll have a look at it. So we had Eurozone December industrial production minus 2.1% versus minus 2% expected. Prior was revised down. The industrial production was down much more than expected. The prior was revised down. So we've got downward revisions and a miss on the headline. So that resulted in some euro selling during the European session. So the general outlook for the euro is weak. We know that German manufacturing has been hit particularly hard on concerns over China slowing down in growth, whether it's slowing down because of the US-China trade war or the coronavirus. Both are weighing heavily on Germany because obviously Europe does trade with China, and a slowdown in China impacts Europe. So we're seeing this continual downward spiral for Eurozone industry, okay? And that's been further confirmed today. So watch from now. If we see that getting worse, expect more euro sellers and more euro selling. So this is, again, is a weak currency. So that's what's come through the European session. So let's go back to Sammy's point. about how the pair has already moved. So looking at the European session, we saw, didn't we, that the Asian equity market was higher. So we knew we're in a risk-on market, yields are up, all the equity markets are up. So we're expecting a commodity currency to be strong. And look, we've got New Zealand dollar. So we've got New Zealand dollar strength on the risk-on tones, and we've got New Zealand dollar strength from the RBNZ. So it's got a double boost of strength behind the New Zealand dollar today. The weak currency pair that we had is the Japanese yen. And the Japanese yen is weak because you see outflows on risk on days, okay? People don't want the yen on a risk on day. That's the day it becomes weaker. So the sentiment for the European session is simply this. We have a weak yen and we have a strong New Zealand dollar. A weak yen and a strong New Zealand dollar. So we would then, we've looked back, we've looked forward, we'd have a look, is there anything that's coming up to interfere with that New Zealand dollar, Japanese yen potential outlook? No, there isn't. There's Governor Orr speaking tonight, so we've got to bear that in mind. That could alter the outlook for the New Zealand dollar. So that's one event that we need to be aware of. We also need to be aware of the equity markets. The changes in the equity markets will affect the risk tone. Okay, so now we know the risk for the outlook, quite clear. And then we go to our currency pair and we'll look. I'm just gonna get rid of this. There we go. Right. We're going to look at the New Zealand dollar Japanese yen pair. And we can see the strong bids come into the market. Okay. So what you could have done, Sammy, and what some traders who I've been working with did this morning, because we were following this pair, was at market, so at European Open, traders bought at the open, at the market price, looking for a move up into that overhead resistance level, that 71.20, 71.30 level, okay? So some traders would have taken a move at market into this level here, okay? Now, the way I was looking to play it was I was looking for a deeper retracement, ideally down at the 70.60 level. So if the price moves down here today, I will be expecting buyers at this level, as long as the risk tone hasn't changed. So as long as everything is standing the same, if price goes back down here, for me, that's just a really good value place to enter. So what can you do now that it's moved? Well, this is what you can do, okay? You can see, look, that this is going up into some really significant resistance level here, okay? Now that is a significant daily resistance level. You can see it's respected here and here on the daily chart, and we've got some minor resistance there. So this level is a key level. You've got 2 points of contact. That's enough to make it significant, okay? Now, looking at the 15-minute chart, what you would want to see, Sammy, obviously this is depending on risk tone, but say you see this break up out of this level, okay? A break of this level a little bit higher. I would just take a break of this level here, okay? Say you see a clean break of 71.30, then for me, 71 kind of 20, this kind of region becomes a place to expect buyers. So in this instance, for me, I wouldn't want to be buying up here because you're going to get a lot of profit taking. But there were some people that were long from here. They've hit into that overhead resistance level and they're just taking profit. So that's what we're seeing now. We're seeing some profit takers, and the people that bought here moved up to that level and thought, you know, I'll either take profit or I'll move my stops to break even, see if I can get a break at this level. So I can't see any reason to buy here at all now. It's definitely not a market. This is not an interesting place. It's not a, remember, it's not good value, Sammy. That is not good value. That's very expensive. And there's no reason why price couldn't come all the way back down here. And you could potentially be sitting in sort of 40, 50 points of drawdown. Now, it may come back up to test those highs, but then you've bought at the tops, and then you're only making a very small profit on the trade if it comes back up, and you've got to endure, you know, 50, 60 points of drawdown. Not practical, not recommended. So from here, looking at risk tone, as long as that Japanese yen remains weak, we get a clean break of 71.30, then look for a test of 71.20, and you can run your stop tighter. You know, you run your stop down at this kind of level. Okay. Yeah, Cecile, right, a very good point. What about the break? Wouldn't it be enough? Not necessarily, Cecile, because you got to balance this. Is the news important? Yeah, it is. The New Zealand dollar, you know, the RBNZ are looking at raising interest rates. So we can expect some reaction to the market. Can we expect a clean break at that level? Not necessarily. When you'd expect something like, say, for example, Cecile, they said we're raising interest rates, or an unexpected interest rate rise, something more significant, then you start to look for those breakouts. And then if you did get a pullback, you just hold anyway because you're quite firm on the price. But with something like this, the weakness with this trade, Cecile, is you're trading it with the yen. Now, here's a question for you, Cecile. What would happen to the yen if the coronavirus outbreak suddenly gets a lot worse? What do you think would happen? It would certainly go down, because the Japanese yen is a safe haven currency. So if the coronavirus suddenly got worse or broke out, we would suddenly see some strong yen bids, and we'd see this move right back down. Okay, and you could be stuck trying to trade a breakout. So a lot of this comes to experience of recognizing which events are more important than others. But this event, you know, buying at market from the start of the European session made sense. Taking, you know, just 20 points, 25 points into that level there, where you either move your stops to break even, trying for a breakout, you know, or just reduce some of your risk, you know, bring your stop back up here. But either way, you're not wanting to, because where are you wrong, Cecile? Because if the price goes down here, are you wrong? No. If the price goes down to there, no, you're not necessarily wrong. I think it's only here, you know, if the price is going through 70, where I think you're wrong. So, you know, potentially there could be a 120 point stop on that, which would be not unreasonable in terms of the fundamentals. But in terms of like practicalities, you don't want to be running a 120 point stop just to make, you know, 10, 15 points. So you've got to keep it practical as well. But that's the way I'd look at that. Now, the other pair to look at is, if you remember, the other pair to look at for the US session is the Euro New Zealand dollar. Remember, we've seen some more weakness for the euro, haven't we? That the industrial production was down, it was revisions down, it's playing into that concern. And remember, the market's always looking for the freshest sentiment. It needs to be new, it needs to be updated as kind of fresh as possible. So then looking for this next session, what could we do here? Okay, so let's see, here's a good example. We've had the New Zealand dollar bid, and then we've had some more bids on, more sellers rather, on the euro weakness. So we've got weak euro, strong New Zealand dollar. So that's the pair we're looking at. Now, where would be a potentially good place to short this pair? Well, the place that there's a couple of places I can see. Okay, so let's go to the daily chart and have a look. Right. So you see the daily chart. We've smashed through this support here. So for me, where I would be interested in selling this pair would be back up here. Okay, back up to this level. Anywhere in the next sort of 12, 18 hours, you know, a move up to there. But remember, we've got Governor Orr speaking. But I would expect sellers up at this level. Now, let's just see if we've got any pivot points around there. I like to use pivot points. So, which one is it? There we go. Here we go. So just going to pivot point standard. Just use this here, right? You can see, okay, look, we're finding some support here. We've got a pivot point here at that pivot, that same area here. And it's a big round number 1.700. So for me, looking at this chart here, where I want to sell is this 1.700 level, okay? So anywhere from about 1.6960 to 1.700, I will be expecting sellers, okay? So let's see if I can't draw a shape here, can I? Let's have a look. I don't think I can draw a shape. Apologies for that. But anywhere from this 1.700 region to this 1.6960 region, I would expect sellers. So that for me is where I will be looking at a retracement, okay? And personally, I expect sellers that in the next session. So the next kind of, let's say the next sort of 12 to 18 hours. And if it hasn't moved back down there, then I've missed it. Now the alternative is to trade the breakout. Now, the breakout of the recent resistance was this level here. Okay, that's going to be the full extension of the average daily range. So we've seen some strong moves. So one other potential is to trade a shallower pullback up into this region here, the 1.690, the 1.6875, anywhere in that kind of region. Okay, that would be a good place for shorts, where I expect sellers as well. And then obviously you're running your stops high, but you're keeping an eye on the sentiment. Okay, so there's no reason why this trade should just suddenly stop and reverse, because the New Zealand dollar is bid and the euro is being sold. So there's strong reasons for the direction to carry on this way. But that is how I look at that pair. But if you're thinking, okay, I've already missed it, then you can try trading that retest of these consolidation area here. And, you know, you've just got to be mindful then of what happens. So how would you deal with this? Say then, okay, Cecile, yeah, this is Cecile saying that, wouldn't you expect a strong New Zealand dollar Japanese yen currency pair? So, okay, when I would expect a strong move up is possible, Cecile, but is it worth risking that that's definitely going to happen? Where's the neckline you're talking about? Can you? Okay, we've moved on. All right, that's cool. I'm sorry, Cecile. My apologies for only just picking up your message there. I hadn't scrolled down on the question, so my apologies for that. But that's how I'm looking at that Euro New Zealand dollar. So move up to there, but ideally for me, I want a deeper pullback up to there, and then, you know, for me potentially, I'd be more happier holding that, say with a limit order overnight, than I would with a yen pair. Now the reason for that is that because the yen is a strong risk off safe haven, if you're trying to sell the yen when other people are buying it, you can quickly lose a lot of money. So it's not a trade that I would want to leave. Whereas this one, I'd feel more confident. Say, say I went to bed and I thought, okay, well, price is down here. I thought, well, I might Governor Orr speaking, hear what he has to say, and then as long as that's clear, I would consider leaving an order in at this level, because you never know, you might get pulled in early morning Europe or something like that, and you're back in the right direction. But generally speaking, I want to close my trades out before I go to bed and before I close. So as an intraday trader, you get your trades done in the morning and the day time. For this kind of trade, it's daily sentiment. You're looking at the daily mood. You're looking at these strong, these weak currencies. Okay, so that's the two currency pairs. Have a look at them as we go through, and also use this sheet in your own trading. Try and do it yourself. Try and think each day, well, okay, which is the strong currency? Which is the weak currency? That is the key grasp for you to get. Use this. Look at the recent set. Can you summarize the sentiment? Look at the charts. Pair up weak and strong currencies. Write them down. Look for key technical levels to enter and place your orders. Now, remember, you're all going to have a different technical system. I don't teach one particular technical system because there's many different ones that work. Oftentimes, for traders, it's not the technicals that are the problem. There's lots of good technical systems. It's more trading psychology, how to use the trading fundamentals. So you can use your own system as well with these outlooks and see how they go. Again, you're looking at the strong and the weak currency for Europe, strong, weak currency for America. Take that away with you and do that in your own trading. Okay, so we've looked at the charts. We'll look forward. So let's just quickly look at the markets to see what key events we have coming up. And let's have a look. Key event for us to look out for, there's a couple. There's Fed Chair Powell speaking. That has opportunity of moving the dollar around. So be aware, if you're trading the dollar, you need to be aware what Fed's Powell speaking at 3 p.m. Also, we've got Governor Orr speaking later at 7:10. Be aware of that. We've got the general risk tone. So keep an eye on the equity markets. I'm going to put in a website for you to use where you can see some equity prices. It's called teletrader.com. I'll give that to you. And also, I'll give you a website where you can see what's forexlive.com, where you can see what Fed Powell's saying. So that's both sent out to everyone there now. And you've got US oil, crude oil inventories. Now, the private data out last night showed an increase, a build in oil capacity, and oil's being moved around very much on the risk on tone. But look at the crude oil inventories, because that has the potential to move oil around as well. Okay, so they're the major events coming up. And then in the night, we've got Governor Lowe speaking and Bank of Canada Governor Polotz. So Australian dollar and Canadian dollar, be aware of those guys speaking. Obviously, another interesting chart to look at is the Australian dollar New Zealand dollar chart. Okay, we got Governor Orr and Governor Lowe speaking. So we've got the two different governors speaking. So if there's more of a divergence, there's a potential for more down moves in this pair. Okay, so just keep an eye on that one. I was also keeping an eye on this pair. I was looking for a deeper retracement to potentially short the Australian dollar New Zealand dollar pair. Okay. Okay, guys. So what trades are you looking at? Let's have a look. What are you looking at? What trades have you got on your radar? How are you thinking? Just pop it in the question panel, and I can have a look and see what. I definitely think something with the New Zealand dollar today is worth looking at, particularly for intraday trading. That's it's a good hawkish move by the RBNZ, and the mood of okay. So we got Australian dollar, Japanese yen buying. Yeah, that makes sense to me, Sammy. So Sammy's looking at Australian dollar, Japanese yen buying. We can see we've got the bullish sentiment in the market. We've got strength from the Australian dollar, weakness in the Japanese yen. We've got the risk-on tones. So that all makes sense. Just the obvious first target for you, Sammy, is going to be this 74 kind of 28, 38 region. So you've got overhead resistance. So that will be your first target. So if price goes into them and breaks above, you could look to rejoin. Price move back down to the 74 handle, I would still expect buyers there. So that makes a lot of sense to me, Sammy. I think the obvious thing to watch out for here is just make sure the risk tone remains on. As long as risk tone remains on, then we should expect Australian dollar, Japanese yen buyers. Yeah, nothing wrong with that, Sammy, at all. Makes a lot of sense. Of course, other alternative would be New Zealand dollar, Japanese yen. We've already covered that. Okay. Okay, very good. We'll look now at what's going on with the Bank of Canada. I don't think anyone's got any more questions. So we are seeing some Canada strength in the market at the moment. Now, again, we see Canadian dollar strength with oil prices rising, and with the risk-on tone, that's supporting the CAD. So that's what we're seeing, some US dollar CAD selling. So the Canadian dollar is basically being moved at the moment on kind of market speculation about what the Bank of Canada will do next. Now, the Bank of Canada they were much more dovish at their January meeting, and they kind of gave the indication that they might be cutting in the months ahead, because they removed the description of saying that the key rate was appropriate and that the Canadian economy is no longer operating close to capacity. So there's a bit of a backtrack. So that's why we've seen some weakness in the Canadian dollar. And as well as that, with the fall in oil prices, if I just quickly show you the oil prices, right? See, US dollar, Canadian dollar has a 96% negative correlation with oil. So in other words, when oil goes down, US dollar, Canadian dollar goes up, and vice versa. So if you look here, you can see that down move in US oil. That down move in US oil be matched by an up move in the US dollar CAD. That's not a coincidence. There's a 96% correlation. Okay, so with the concerns about maybe going to be a drop in demand from oil, this has made people think, well, yeah, actually, maybe the Bank of Canada will cut rates. And given the Bank of Canada's more dovish tone, markets are now pricing in 60% chance of a 25 basis rate cut in April. Okay, so the thing that's going to really move the CAD here, I think, is going to be oil prices, which are going to be the key issue. If we get oil prices back up to that $65, $60 barrels perspective from the WTI US crude, then that is going to be supportive for the Bank of Canada. Okay, and they've assumed oil prices in the January forecast of like $60, $65, and if you look at US oil prices, they're just over $50 a barrel. Okay, so the Bank of Canada was assuming prices at 60, 65. So if we keep getting weakness, keep getting oil weakness, then we're going to continue to see US dollar CAD weakness and US CAD weakness and US dollar CAD strength. Okay, so that's going to be the key issue here. And so what's going to be moving this Canadian dollar is very much on the coronavirus fears, because it's not that the coronavirus is directly impacting Canada, but it is indirectly by impacting oil prices. So that's what's to look for. Look for oil prices, and then look at Governor Pollott, see what he says in his speech. He's got a speech coming out tonight, so look for clues there. But that gives you a heads up that the Bank of Canada have basically the markets are pricing a 60% chance of a interest rate cut by April. Okay. Finally, as we close, don't forget to look at your risk. For those of you who are not aware, I advocate trading as far as possible with as little leverage as possible. So if you're looking to build up a trading service where you run a fund, you trade other people's money, you want to work for a professional investment company, the best thing you can do is to trade without leverage or minimize your leverage. So if you can show steady and consistent returns with a low drawdown, it makes you much more attractive as a trader and much more attractive for investors. So if you, generally speaking, if you roughly have your risk matching your trade size, so in other words, if your account size is $10,000 US, then let your trade size be 0.10 mini lot. If your account size is $100,000 US, then to trade without leverage will be to trade 1 lot. And if you limit your leverage to like 1 to 2 or 1 to 3 at max, then you're going to have a lot less problems with heavy drawdown or losing huge chunks of your account. Because obviously, if you lose huge chunks of your account, you know, a lot of investment firms, if you lose 10% of your account, then your account's just frozen. You stop trading. So getting into that kind of habits yourself can be helpful, so that you don't take too big a risk and it affects your trading psychology. So leverage down as much as possible when you're trading, just to help you in that. Okay, guys, that takes us to the end of our session. It's been good to have you. Yasser, Van, Sami, pleasure. Salvatore, Lolu, great to have you. Cecile, thank you for your questions. Ifam, great to have you as usual. Akak, Hashik, Izar, Suresh, Van, lovely. I hope you all have a very good week and enjoy the rest of the afternoon. And look out on those currency pairs that I've highlighted, the Euro, New Zealand dollar, New Zealand Japanese yen, and watch out for the risk tone going forward into the US session. I wish you all a very good afternoon, and thank you very much for coming. Yeah, thank you, Cecile. That's great. Take care now, guys. Goodbye.